Hello traders. This is David Onimi, and welcome to my YouTube channel again. I'm very sure you've been gaining a lot of values, and I must say thank you for all the likes and all the comments. Thank you. And there's one thing I said I want to assure you guys that even as a beginner trader, you can become profitable. And one of my mission is to see that you understand this industry, this forex market, trading, everything about trading. One of my mission is to simplify it for us so that we can understand. The market just opened now. You can see the long the long bullish bearish candle. The market just opened now. So today I want to teach us something very important. If you are a beginner trader, this video is for you. If you are a pro trader, this is like a refresher course where maybe some things, some basic things, foundational things you might have missed out. So it's more like a refresher course where you need to refresh your memory. And for beginner traders, this is one of the videos that you will watch, and it will help you scale through. So if others are spending like a year to become profitable in this industry, if you understand this video, you can become profitable in 6 months, in 9 months, in 3 months, if you actually understand what I want to teach us here. It's very simple. You want to actually understand how to read your chart. One of the challenges traders have is how to really read the chart. Imagine you open your chart, you're seeing a bullish candle, you're seeing a bearish candle, and you don't even know what to do. You've gone to your higher time frame and you're seeing a bullish market. You come down to your lower time frame, you're still seeing a bullish market, but you don't even know where to enter from, how to enter. Sometimes you're confused. So this video is going to simplify everything for you, and I believe you're going to gain a lot of value. So what I want you to do now is go and subscribe for valuable videos like this, because I promise I'll be dropping video on weekly basis, and I'm going to be dropping daily signals on my shorts, where I usually post my short videos. So this is it. Imagine you open your charts as a trader and you want to trade. You have money in you've funded your account and you want to trade, and the reason you want to trade is because you want to become profitable. You've seen people's posts, how they become profitable. You see them screenshotting their profit and then posting it, and you're wondering, how is it that anytime I enter a buy, that is when the market will be selling, and after I come out from a buy, I enter a sell, that is when the market will be buying? It's quite funny. And then you hold on, you wait, just for you to hold on, or you come out of the market, you see that the market is already going your direction, and you're wondering, I just lost $10, $5, $50. What's really happening? Why do I keep blowing my account? So this video is going to help you understand how to study the market from A to Z. You're going to understand how to study the market, your charts, and then how you can actually enter your trade and become profitable. As you know, I'm a price action trader, and that's why you see that my chart is so clean and neat. You see I've not even put any trend line, support line, resistance line, and all that, right? I'm going to do that in the course of this video. So imagine you open your chart and you want to trade for that day, and this is Great Britain Canadian dollars, and this is what you are seeing. If you have been following my video, you know that the first thing you need to do as a trader is understand the major players in the market. And once you can understand the major players in the market, you will now graduate into understanding what they are doing at that moment, because uh, the big boys are the ones controlling the markets, and you need to know where, at what point, they are changing, they are buying or they are selling point. You need to understand which big boy is actually in possession of the market. The big boy in the market, is he about to buy or is he about to sell? The market can be going bullish and you want to enter a buy. All of a sudden you see that the market is going bearish. So you need to understand. You don't just understand or define that there are more sellers in the market. What do you do afterward? Right now, you open your chart. You want to trade for that day. The first thing you need to do is you go to your higher time frame. I usually start from weekly, daily, sometimes monthly. But let's imagine we go to monthly. Let's start from monthly. Now, this is monthly, right? You can see that from monthly, this market has been ranging, right? From monthly, and you don't need too much data. Now, if I should zoom in, you see that it's a downtrend, right? It's a downtrend. So what you're doing in your higher time frame is to identify and to take note of key levels where the market has respected over time. So this will help you understand from what point to what point is the market going to. And key level is very, very important, because that's the place where the market has respected over time, especially when you have key levels up to 3 point, 4 point, where the market has respected over time. You want to pay attention to that level very well, because you're seeing this chart, you're seeing the candle, right? Like I said, it's a real market that is represented in charts. So whatever you are seeing here is simply the interpretation between the buyers and the sellers. The formation of the candle is simply what is happening in the real world and is being represented in the chart. So when it's going bullish, it means people are interested to buy that particular currency. When it's going bearish, it means people are interested in selling that currency. It's simple. So you just need to understand who and who are buying or who and who is selling, and then you follow. So you are anticipating. You don't participate, you anticipate, because you may want to follow the trend and you don't know that maybe the buyers have changed hands. You understand? So you anticipate for the move. So it's a bearish market from 1 month, right? But at this point, we notice the market was ranging around this level here, and you can see that I have already drawn my key level. I have summarized the the ranging market into one zone. Now what I'm going to do next is to clone and also identify another key level. You can see how I am able to identify key levels. Why did I put my support line here? Because the market has respected this zone 1, 2, 3, right? It has respected this zone, and you notice this zone here again. See where the market has respected. So you want to pay attention to it. Now if you look at this zone here too, you see that the market is finding it hard to break above this level 1, 2, 3, 4, and 5. So you want to take note of that zone. Now secondly, we notice the market got to this level. Let's bring this here. We notice the market. Let me take this, and let me clone it and bring this here. Right, we notice the market was going bearish after it broke um after it broke the ranging market, and all of a sudden it got to this level at 1.51376, and all of a sudden we notice a strong bullish market around this zone here. So we need to pay attention to this key level. Anything that stopped this market from going downward is something we need to pay attention to, right? I want you to observe the way I'm taking it. I'm not that fast. I just want to take it slow and steady. Now, this is one. Two, the next thing I'm going to do is I'm going to go down to, after identifying key levels from the monthly, we notice it's a downtrend, right? A bearish market. The next thing I'm going to do is to go to weekly, so that these zones I have identified, if I go down to weekly, I will see it very well. It will be more clear and more pronounced to me. I'll be able to identify it very well from the weekly. So I'll go down to my weekly. Right, I'll go down to my weekly. You see what I'm doing, right? I'll go down to my weekly. You notice this is a ranging market I pointed out from monthly, and you notice this zone here, right? Now you also notice this zone here, and now see what's happening here. At this point, you don't know if you're to buy or to sell. We're trying to study the market. Now the market got to this zone, respected this zone, got here, retraced, got here, retraced, got to this zone, retraced, got to this zone, retraced. Now it's a bearish market from monthly, but in the weekly we notice that as much as it's a bearish market, the market got to this level and we notice a strong reversal, right? And after we start seeing higher low, higher low, higher low, higher low, and then high, right? Now traders, observe this point. It's higher low, higher low, higher low. Now you notice this high did not break above this high here. Let me bring this down, right? This high here did not break above this high. It's something you need to pay attention to. This is the high, came down, broke it, came down, but this new high here was finding it difficult to break this high here, the previous high. And then look at the strong bearish candle that formed, and this is weekly. So 1 week, 2 week, 3 week, 4 weeks, right? Look at the strong pullback, right? And then we notice another high, but this high did not reach the previous high. What do you need to do? You need to take note of that point. You notice it, right? This was the first high. This is the first, this is the second, and now this is the third. So put your horizontal line here, your resistance line. You notice the market did not get to this level. This is a clue that there are already sellers in the market. The buyers are no longer interested in buying it at this level anymore. The price is too high. Imagine you want to buy a house. And you didn't get the information on time that the sellers are offering to sell at 1.5137. You didn't get to hear that information. Now you finally got to hear about the house, but at that point you notice the price has already increased. The value of the house has already increased, and the new value of the house is now 1.59877. You didn't buy, or probably because you had a lot of money, you bought at this level, right? Now you notice that Presently, the value of the house is now at 1.73356, and you want to buy more, but you notice, hey, the price is too high. But initially, we noticed that when the price got to this level, we had less buyers at this level, so they had to reduce the value, the value of the house. They had to reduce the money, a discount. More sellers, more buyers took in, right? But it was not up to this level. They had to reduce it again, the value of the house, and then more buyers took in from here. But it didn't get to this level. So what happened? They had to reduce the value of the house to this level so that more buyers can actually buy, because they have more of the house, right? They have more of it and they need people to actually buy it, right? Now, history has played here, and this is the present condition here. You who did not buy at this level and bought at this level, you notice that the price has gotten to this level. Initially, the price got to this level, and what happened? A strong pullback. Now, when the price got to this level, based on human logic, you know that the buyers at this level will reduce, and people will no longer be interested in buying this house because the price is too high. So what do you expect the sellers to do? They will reduce the value of the house. They'll give a discount so that more buyers can come in. But imagine you are building you have a real estate and you have like 1,000 houses to sell, and so far you are able to sell like let's say like 500, and you still have 500 to go, but you discover there are less people interested in buying the house, your real estate, right? What do? You give discounts, right? So this is what is happening around here. People are no longer interested in buying at this level, so they give a discount for more people to buy. But compared to the discount that was given here, look at the strong bullish market and the retracement, strong bullish market retracement, and then look at the retracement from here to here. It's 100%, and look at the retracement, 100% retracement, right? Even more than 100% retracement, which is the pullback. So what do you notice? People are no longer interested in buying at this level anymore. So they took it up to this level, and they are still going to reduce the value of this product. They will still give a discount. And if you look closely, you discover that a double top is already forming here. This is 1, 2, and what do you expect? This market definitely go down. Are you catching the secret? So we are still in weekly now. We'll go down to daily now. Let's go down to daily and see what's happening there. Look at the zone that was respected and rejected by buyers, and then they gave a discount. And now another zone here. Let me bring this in so that you can see what I'm saying very well. Now another discount was given here, right? Now I want you to study the formation of the candles. It will help you understand who are the major players in the market. From here, we discovered that the market was going bullish, right? But look at the bullish market and look at the retracement. Almost the same. And then if it was difficult for the buyers to even push it up at this level, and then they gave a discount, and then more buyers came in, and then they gave a discount, and then more buyers came in, and then they gave a discount, and the discount is about 50%, and then more buyers came in, the discount is about 90%, and then more buyers came in, and then the discount is about 20%. And then more buyers came in, and look at the discount. Look at the discount from here to here. Look at the discount. Sellers came in here and even went down below where the buyers took it from. Now, the buyers also tried to take it up, but they could not break above this level. Now, more sellers came in. Did you see that? More sellers came in. Now, buyers tried to take it up, but more sellers came in. Buyers tried to take it up, but more sellers came in. In all this, I want you to notice that this is the recent high, and so far they are finding it hard to break this recent high. What was it telling you? Sellers are already in possession of this market. The people, my real estate example, let me bring it back again. The people who are selling the real estate, they notice that they have less buyers. People are not interested in buying at this level, so they are giving discount. So when they gave discount, buyers came in, but it did not get to this level. Then they gave a discount, buyers came in, finding it hard to go up. Then they gave another discount, buyers came in, still not enough, and then they gave a discount. So at this point, they know that people are no longer interested in buying their real estate anymore. So what do you expect? They'll bring it. So this market is open now. This is daily. Expect this market to get to 1.69379. This is my horizontal line, my support line here. You see the reason why you have to draw all these lines, because this is where the market has respected. Why did I draw my line here? Because the market got to this level initially, and then more buyers came in. So what do you expect? They will give a discount to this level so that they can see if buyers will actually be interested at this price here, of which definitely the market will get to this level here. So, but the market will continue to go down or will go up depending on the interest of the buyers. Depending on the interest of the buyer. So expect this market to get to 1.676. So if you're watching this trade now, if you're watching this video now, go to your lower time frame, of which I'll still get there, and look for a sell opportunity to sell this market to this level here. Then when you get to this level, you observe the market. If they will give more discount, then the market will go down. But if they don't give more discount, then more buyers will come in. At least they may take it to this level here before they will not give a discount. But remember, from our weekly, we are seeing double top, right, which is forming M pattern, right? You can also see it from here, right? You can see the formation. Now we are understanding our chart. The next thing you do is to go to your 4 hours. We are done with daily, so you go to your 4 hours. Now we know that we want to sell this market. Anything you're doing is to sell the market. The thing you want to do now is why you want to sell or where you want to sell. Do you understand? So why do you want to sell this market? That's the question you need to ask yourself. Why do you want to sell this market? Because from the higher time frame, we have done a proper analysis, and from our analysis we discovered that sellers are already in possession of the market. The market is finding it hard to break this previous high, and then we have enough discount here. More buyers came in, enough discount. More buyers came in, enough discount. Buyers try to go up with it, but they're finding it hard. So you see, the market will definitely come down to this level here at 1.68765. Expect this market to get to this level here. Now we are looking for our entry opportunity. We have identified the major players in the market. We have identified the chart pattern. Sometimes the chart pattern does not really work, so don't build the theory behind chart pattern. Oh, this is the chart pattern. No. Build a theory around the logic, around your logic, around understanding the major players in the market. Try to interpret the market based on what you are seeing not just by chart pattern, top, head and shoulder, pin bar, different kind of candle formation. No, it is beyond that. It is beyond that. Now we are done with 4 hours. We go down to 1 hour to see if we can also get other confirmation. Now when you get down to your 1 hour, you notice the lower high, lower high, lower high. Now, right, see this again here, see this around here. Let me zoom in so you can see it properly. Do you see the way the market is falling gradually? The market fell from this level here. The market fell from this level here down to this level, right? Down to this level. Sorry about that. Down to this level, right? Came down, went up, right? Came down, went up, came down, went up. Now, we have found a new high around here, and this is the new low. This was where the market got to, the new low. You can see it here, and then it went up. Now, immediately this market opened, you saw the bearish candle that came down. This is a sign that sellers are interested in this market. They want to still give a discount. They want to give a discount around this zone here, right? So all these things are giving you an edge over this market. You're seeing the way I am analyzing the market step by step, little by little, right? You notice buyers could not even break above this level. Look at the market fell from this level, from this price to this price. Buyers tried to take it up, but they could not break above this level. Now came down to this level. Buyers tried to break it, but did not get to this level. Now the market just opened. Now sellers are already in position of the market. So now we are expecting that this market will go below the recent low. Below the recent low. How do you now enter this market? This is where you need to go down to your 15 minutes. I usually like to enter from 15 minutes and 3 minutes. And what I usually do is I look for two recent low. I will want this market to break below this previous low. I want the market to break this previous low and then digest it, right? I want the market to digest it before I will now enter. So I'll be observing this market. I want this market to break below this previous low and give me a lower low, telling me that yes, the market is willing and is ready to go bearish. Then I will enter and I will go down to my 3 minutes to look for entry opportunities. I'll go down to my 3 minutes to look for, you know that our target is at 1.68765, right? Now let me zoom out so you can see very well. Now this is a recent low. I'm looking for my entry opportunities. If I had seen this move before, I've done this analysis before, and I told us to sell. The best time to have entered this market is somewhere here, but now you can't enter at this level. This is lower high, lower high, lower. I want the market, since the market just opened here, I want the market to give me another lower low, and then I take my short from here. So traders, what do you do? As you're seeing, if you're watching this video now, look for a good entry opportunity. For me, I'll wait for the market to break below this low, so that why will I wait for this market to break below this low? I want to look for a good spot to put my stop loss. I want to put my stop loss at 1.70500. 1.70500. That's where I want to put my stop loss, but I need the market to go below it so that I can put my stop loss there and then enter a sell. I don't know if you have gained something, if you've had some aha moment, like my mentor will always say. Have you had some aha moment? So as a beginner trader, if you understand what I'm saying, and I want you to watch this video over and over again. Watch it over and over again, and then you will understand what I am saying. You go down to your higher time frame, understand the direction of the market from the higher time frame, and if the higher time frame is going bearish, make sure, especially if you want to do a day trade or 4 hours trade, not scalping, or maybe 24 hours. If the market is going bearish from the higher time frame, come down to your lower time frame, look for entry opportunity that is going in the same direction with the higher time frame. It is risky to counter trade as a beginner. It is risky to counter trade. Now, I am not saying that buyers will not come into this market. Buyers will still come, and that is why I'm waiting for this market to break above this level. Don't be surprised once the banks open. Don't be surprised, the market can even go up, right? And I'm even expecting the market to, let me pick this. Now I'm expecting the market to come and break this level here, to come and test this level here, so once banks open, you see this market that is coming down now. I'm even expecting that the buyers will take possession of this market from this place and come and touch. Now they don't even know that I drew my support line here. But why did I draw my support line? Because of this resistance around this level here. You see that the market got here and went up, right? The market got to this point and went up. The market got to this point and went up. So I need equal support and resistance. I need equal support and resistance, telling me that at this point now, this price has been rejected. I want this price to be rejected, then I enter my sell. That's why I drew my line here. The broker is not aware that you drew your line here. This line itself is not necessary, but it helps you to understand what you are doing. It helps you to, okay, once upon a time the price got to this level, respected. I think this is at 1.70572. It's an important price that both the buyers and the sellers are willing to bargain with, right? So I want to see that this price has been rejected, then I can enter my sell. Traders, this is a big secret I am sharing with you. I'm sure you have gained value. Little by little. It takes patience. Don't just rush and say, okay, I'm going to enter. No, you hold on. The market will give you a sign. The market will always tell you, like I said, anticipate. So what I just did now is I am anticipating. You see that I'm not participating, right? If I want to participate, I would have just entered a sell from here. But I am anticipating. And my anticipation is that I want the market to break below this level here, telling me that this price has been rejected and a new price has been given. Then I will take my shot from here to this level here, at 1.68765. And when the market gets to this level, I will make sure I observe this zone very well to know if more buyers will come in here and take the market to this level, or discount will still be given, and then the price will continue to go bearish. I'm sure you have gained a lot of values from this video. This is the Forex Trader Cycle with David Onimi. I want you to like and then you subscribe so that whenever I release updates like this, you will be notified, and then YouTube can actually recommend the videos to other traders out there. Make sure you comment and make sure you like. Thank you once again for watching through. Bye for now.